Whether you're watching this video around tax time or not, one of the biggest questions we get asked as financial planners is how can we save money on taxes? Well, one of the things that's important to understand after the 2018 Tax and Job Cut Act, the Trump tax reform, it really made it a lot harder for you as an employee, as a W-2 earner, to really save a lot on taxes if you're itemizing because the standard deduction moved up so high that for most people it just makes sense for them to take the standard deduction. So I got asked recently is, should I itemize? Well, it depends. It depends on what? It depends on what your Schedule A looks like. So again, I am a CFP. I am not a CPA. So please consult with your own individual tax accountant. But what I wanted to do was share from the IRS.gov portal what the Schedule A looks like. And on your Schedule A, you're really looking at the four main things, whether you've paid for medical expenses, and that's usually 7.5% of your income, taxes paid, interest, charity, and then have you had any loss in terms of home, auto, what we call casualty, theft, or losses. Okay, so if your Schedule A, if the total of all of these items is significantly bigger than the number for the standard deduction, then you may want to itemize. All right, what's that number? So for 2024, single filers, 14,600, that's your standard deduction. That's how much you get right off the top. Married filing jointly, 29,200. Head of household, that's an adult with a minor child or a senior dependent. That's 21,900, and then you get a little bit of an extra bonus there if you're a senior citizen. So if this number is lower than your itemized total, then you may want to itemize. Now, if you look at this form, this is really hard, especially for young professionals. If you're paying a lot in taxes, if you're doing a lot of contributions to charity, if you had a lot of medical expenses, procedures that are actually adding up here. One of the things that used to really help people itemize in the past was interest. And today there's certain limits in terms of income on mortgage interest, but that one is not really necessarily helping people go immediately to being itemized. And then contributions to charity. So in reviewing all of your tax forms, make sure you're documenting your receipts to qualified nonprofit organizations. Make sure you're documenting and you got those bank forms on how much interest you've paid. Make sure you're keeping track of all the taxes that count here. Again, federal income tax does not count. So if you paid a lot of taxes last year, doesn't mean that that goes on to this form this year. And so make sure that the qualifying taxes are listed here. And then the big one with medical expenses, for most people, they really won't get to that 7.5% of income. And so again, from a financial planning standpoint, our job there is to help with tax strategy, to be proactive with tax planning, not reactive. And oftentimes we're collaborating, having conversations with those CPAs. So if you guys have any questions, reach out, send me a DM. But good luck this tax season.